It's time for Companynama, where we give you a weekly roundup of the corporate and startup world. I'm Shrestha Tiwari. Over to this week's big corporate stories first. Anil Agarwal-led Vedanta has pledged an additional 2.44% stake worth 3,500 crore rupees in its subsidiary, Hindustan Zinc Limited, for 1,500 crore rupees as part of its plan to refinance old loans worth 10,000 crore rupees. With this, Vedanta has pledged 91% of its stake in the mining company. It holds 65% stake in HZL. The government holds a 29.54% stake in HZL, which was privatized more than 2 decades ago. Vedanta has entered into a term loan agreement under which one of the security covers include pledging shares of HZL. On April 13th, Vedanta's board had approved raising of up to 2,100 crore rupees through issuance of non-convertible debentures through private placements. And Kumar Mangalam Birla has returned to the board of Vodafone Idea as an additional director less than 2 years ago after leaving the mobile service provider. Birla, formerly a chairman at the debt-ridden telecom giant, joined the board on April 20th. Vodafone's Indian joint venture said in an exchange disclosure. He also serves as the chairman of conglomerate Aditya Birla Group, which held an 8.36% stake in Vodafone Idea as of February 7th. Adani Ports and Special Economic Zone is planning a partial buyback of certain debt securities. The board of the ports operator is meeting on a Saturday to consider first and a partial buyback of certain of its debt securities during the current financial year. The outcome of the meeting was not known till the recording of this video. Following the report on the group issued by Hindenburg in January this year, the group paid off at least $3 billion during the March quarter. This payment includes payment related to pledged shares and bonds, but it still increased the debt of the entire group by about 21% in FY23. The total debt on the group is increased to 2.3 lakh crore rupees, and the continuous reduction in debt is very important for the group to improve the sentiments of the shares. Abu Dhabi fund 10x AD Apollo Global are in talks to invest in Byju's parent or Akash, according to a report by the Economic Times. According to the report, Byju's CEO Byju Ravindran is in discussions with the US private equity major Apollo Global Management, Abu Dhabi-based fund 10x AD and Abu Dhabi-based ADQ's venture capital arm, Disrupt AD, for investment in the company or its arm Akash Education Services. The troubled edtech firm is looking to raise at least $400 to $600 million from other investors. Byju has also approached Apollo Global Management, a leading US private equity and alternative asset management group, for a $200 to $250 million structured financing for Akash Education, according to the report. However, it is not clear if 10x AD will lead an investor consortium of family offices and ultra-high net worth individuals in Abu Dhabi, or go it alone and invest $150 to $200 million, the report has said. Food delivery firm Zomato has said on 19th of April that most stores of its grocery unit Blinkit had resumed operations after being shut following protests by delivery partners. In a letter to the BSE, Zomato said that it has made changes in the delivery partner payout structure with respect to the Blinkit business to address the needs of the delivery partners, improve customer experience, and also reduced cancellation or order rejection frauds by few delivery partners in the system, and that such changes will be done from time to time. The letter also said that it had to shut down some of its stores for a few days to ensure safety of the employees at stores and the delivery partners. Most of these stores have now resumed operations. Blinkit recently shut down some of its stores in Gurugram, Haryana after delivery workers went on a strike. Zomato said that the protests had no impact on its operations or financial performance. Nusli Wadia-owned Go First will receive 600 crore rupees more as promoter equity and bank debt by April end. The Wadia family and banks would provide 300 crore rupees each. This investment has been approved in the board meeting held on Tuesday this week. As per reports, in the last 20 months, the promoters have invested 3,000 crore rupees and will provide another 290 to 300 crore rupees as equity by the end of April. An additional 300 crore rupees is expected to come in the form of bank debt under the Emergency Credit Line Guarantee Scheme of the Indian government by April or May. Go First, which made its highest annual financial loss to date in FY22, has been tackling huge operational issues in the past few months as half of its aircrafts have been grounded due to supply chain disruptions pertaining to Pratt & Whitney jet engines. For several months, the airline has lost significant business in an otherwise upbeat domestic aviation market. Wadia Group is also looking for a strategic investor and is talking to potential investors as well. Tata Sons is all set to acquire Taiwanese firm Wistron's existing plant near Bengaluru for around 5,000 crore rupees, according to sources. At the same time, the group is expediting investment worth 6,300 crore rupees in Tata Electronics plant in Hosur in Tamil Nadu. The plant is expected to start production of Apple products by the end of June. Tata Sons chairman N. Chandrasekaran met Tim Cook, CEO of Apple, in Mumbai on Monday this week and discussed the group's plans to make and sell Apple products in India. And as we discuss corporates, let's find out in our special segment which were those companies that were on the radar this week. The pilots' union at Air India has instructed its members to not accept the new employment conditions and wage structure offered by the management. The biggest bone of contention is the assured 40 hours of flying allowance, down from 70 hours in pre-pandemic times. Also, the workmen will be categorized as senior captains, thereby barring them from forming a union or striking. The airline's two unions, Indian Commercial Pilots Association and Indian Pilots Guild, have warned of industrial unrest if the new terms are imposed on them. In other news, the process of merger between Air India and Vistara has gone a step further. Tata Sons and Singapore Airlines have sought the Competition Commission of India's approval for the merger of full-service carriers Air India and Vistara. Also, Air India is looking to partner with German aircraft maintenance giant Lufthansa Technik and French-Dutch airline Air France KLM's engineering unit to bid for AI Engineering Services Limited when it is put up for sale. Ownership of AIESL earlier was with Air India. Before selling Air India, the government had transferred it to a separate company. The dispute between the Kalyani and the Hiremath family over the control of specialty chemical company Hikal has taken a new turn. A legal dispute has emerged between siblings Sugandha Hiremath and Baba Kalyani following their mother's death earlier this year. A non-executive director of pharma and chemicals firm Hikal, Hiremath, has accused her brother and Bharat Forge's CMD Baba Kalyani of trying to marginalize and oust her and her husband from the company. Last week, two holding companies of Kalyani family, BF Investment and Kalyani Investment, had filed a complaint with SEBI alleging that Hikal executives colluded with the company's co-promoters and the Hiremath family in order to block plans by Kalyani family companies to increase their stake in Hikal. The Hiremaths own about 35% and Kalyani about 34% in Hikal. As per the family agreement, Baba Kalyani had to transfer his share in Hikal to Sugandha Hiremath. Indian IT giant Wipro has imposed a new training which ends with a test and possible elimination on freshers who have been awaiting onboarding at the company for over 15 months now. This development comes after Wipro slashed the salaries of these freshers to 3.5 lakh rupees from 6.5 lakh rupees in February. Interestingly, these freshers have already completed a training called Project Readiness Program while awaiting onboarding. The instructions sent mentioned that if the employees do not clear the PRP training with 60% score at least, they will be terminated immediately. IT Employees Union Nascent Information Technology Employees Senate, that is NITES, has called this step unethical and inappropriate. A section of the shareholders of McDowell Holdings has approached the Supreme Court opposing the NCLAT's decision to allow creditors Sun Star Hotels and Estate to proceed with the insolvency proceedings. The shareholders of McDowell, including Porinju Veliad's Equity Intelligence and US investment firms, Acacia Partners, and the financial creditor, are locked in the legal battle over control of the company. The appeal in the Supreme Court was filed by 15.51% of the shareholders. The Supreme Court, after hearing both Both the parties on April 17 said that NCLAT's order in the matter required reconsideration. The Apex Court directed the Bengaluru bench of the NCLT to hear the matter. It said that, however, no final order must be passed by the NCLT. And the NCLT Mumbai has extended Reliance Capital's resolution process deadline by 90 days to July 16. The current deadline ended on April 14. The deadline extension was necessitated as the lenders had decided to hold a second round of auction on April 26 in order to maximize the recovery from the sale of Reliance Capital assets. The three bidders, that is Torrent, IIHL and Oaktree, have confirmed their participation in the auction. The bidders have asked the Reliance Capital lenders to ensure that the resolution plans are IBC and RFRP compliant. Bidders also want certainty from the lenders that there will not be further negotiations after the completion of the second round of auction, and the resolution process would attain finality after the culmination of the second round. Well, those were all the updates from the corporate world. Moving on to the stories from the startup world this week. And Google is asking Indian app developers to mandatorily use its Google Play billing system abroad, failing which their apps will be delisted from the Google Play Store in 14 days. Anupam Mittal, who is the founder of the parent company of Shadi.com People Group, revealed this on his Twitter on April 20th, calling out the move as neo-colonialism at its worst. In India, following an adverse order by the Competition Commission of India, Google replaced the GPBS with UCB, which is nothing but User Choice Billing System. Under GPBS, Google mandates that all in-app purchases go through its payment gateway, and the company charges 30% commission on such purchases. Under UCB, which is expected to be implemented from April 26th, other payment options such as cards, net banking, UPI, wallets, and so on will be available, but will attract a commission of 11 to 26%. Several Indian startup representatives took to Twitter on this. Meanwhile, a court verdict is awaited by the Alliance of Digital India Foundation, an industry body representing Indian startups such as MapMyIndia, Paytm, Matrimony, and Truly Madly, which had also taken Google to the Delhi High Court seeking an order directing the CCI to intervene in Google implementing the UCB system from April 26th onwards. Coup, a Twitter rival in India, has fired almost a third of its employees in recent months as the firm struggles with losses and an inability to raise funds. The homegrown microblogging platform Coup has laid off 30% of its around 300 employees in recent months amid increase in losses, fall in active users, and weak global sentiment. The Tiger Global-backed company has laid off employees in 2 cycles from September to March this year. In September last year, the company laid off 15 staffers, and collectively the number of layoffs is around 90. Well, with that, it's a wrap on this week's Companynama. See you again next week with more from the corporate and startup world. Until then, don't forget to tune in to Money9, and for our other exclusive shows, download the Money9 app.